Ladies and gentlemen, welcome back to the channel. Tesla stock on Friday was down 1.42% to close out the trading day, closing at $429.90 per share. Now, here in today's video, we will go over all of your Tesla stock breaking news. Okay, it was actually a pretty decent rally from the low of the day. The low of the day was $416.58 per share. And this is exactly what you wanted to see. Now, we do have some big news coming out. We do have some big catalyst coming for Tesla that we must talk about. There's also a clip on CNBC that I do want to share with you. So we got some work to do in today's episode. Hit that like button and subscribe to the channel if you have not done so already. Check out that link down below in the description of this video if you want to come trade with us, if you want to come identify small cap opportunities in the AI, energy, robotics sector with us. These are main themes, I believe, over the next decade or so. And we want to be early to high quality opportunities. And that is how we have been able to be up over 200% this year in our trading community portfolio. So come join us if you would like to. Obviously, it's not a recommendation. I'm not a financial advisor. We've done well, but not all stocks are going to do well, okay? So don't be a jackass. Don't YOLO shit, okay? Have some common sense if you join that, okay? But that link is down below in the description of today's episode. With that said, ladies and gentlemen, let's get into today's episode. First things first, today, President Trump is considering significant tariff relief for Tesla, Ford, Toyota, Honda, and GM. Quote, the signal to the car companies around the world is, look, you have final assembly in the U.S. We're going to reward you, Republican U.S. Senator Bernie Moreno and auto officials said. For Ford, for Toyota, for Honda, for Tesla, for GM, those are the almost in order, the top 5 domestic content vehicle producers. They'll be immune to tariffs. In June, the Commerce Department said it planned an import adjustment offset equal to 3.75% of the suggested retail price for eligible U.S. assembled vehicles through April of 2026, and then a second year at 2.5% to address tariffs from imported automobile parts. Trump is considering keeping the offset at 3.75% and extending to 5 years and expanding the offset to U.S. engine production, Moreno and auto officials said. IIHS has released a new video comparing the crash test ratings of the Tesla Cybertruck and the Ford F-150 Lightning. The Cybertruck outperformed the F-150 Lightning in the updated moderate overlap front crash test, rear passenger injury measures, head, neck, and thigh, driver injury measures, leg and foot, rear passenger restraints, and dummy kinematics, and seatbelts and child restraints. It says the IIHS on the F-150 Lightning's updated moderate overlap front crash test, quote, it received a poor rating. The highest concerns in the downgrade were that rear seat occupant. What we saw was, one, the side curtain airbag got hung up on the B pillar. We had some high neck tension on that rear dummy, some elevated chest injury measures, and some submarining of the seatbelt, which can cause soft tissue injury in the abdominal region. All of these added up to a poor rating, which is currently not something you want to see in a modern vehicle. The Cybertruck was a different story. It performed very well. Good enough to earn a good rating in the very challenging test. The headlight glare issue on the Cybertruck should be a relatively easy thing to fix. And this is some of the big news today. Elon Musk on X says there was a last-minute bug that popped up with V14. So Tesla is deciding to postpone the release until Monday. But that gives Tesla time to add a few more features. So V14 is going to start rolling out this Monday. Analysts in recent days have called V14 a potential catalyst to move Tesla stock. So we will see how good it is. We'll see if it has an impact on Tesla. But this is one of the catalysts that a lot of analysts have been talking about. And considering Tesla stock sold off, Thursday and Friday because of delivery numbers, which were actually much better than expected, expectations are lower. The traders that were just trading Tesla's deliveries are out of the stock. So I think it could actually serve as a positive upside catalyst for Tesla. But again, we will see. And look at this incredible video. Elon Musk has released a new video of Tesla's Optimus robot learning Kung Fu, getting pushed around, etc. This is, again, not teleoperated. So this is all AI. This is all, neural nets. This is Optimus just doing its thing, which is pretty cool. Not teleoperated at all. Wow. There is some serious progress happening with Optimus. Now, in final option activity on Friday for Tesla, you had 352 different trades from hedge funds and institutions, totaling $694.57 million with a positive order value of 86%. So it was very positive. The last 2 days have been very positive. Thursday, you had 365 different trades, totaling $315 million with a positive order value of 75%. Even though Tesla has sold off the last 2 days, you're still coming in with, very positive numbers. So again, that's kind of a sign that we're not in a bad setup for Tesla. I think simply put, there was a buy the rumors, sell the news situation around deliveries. But the fact is, deliveries came in really good. Now, in my personal opinion, one of the upside catalysts that I could see for Tesla that we really haven't talked about in the last couple of days, we've talked about V14, we've talked about Elon's compensation package and the shareholder meeting on November 6th. We've talked about robotaxi entering new cities, but something else is Tesla having a good Q4. Nobody's expecting Tesla to have a good Q4. What if Tesla has a good Q4? What if the tax credit and some of the rules make Tesla have a good Q4? Q4 is organically the strongest quarter for Tesla. So everyone's thought process on Wall Street is Q3 is going to be really strong, and then there's going to be a big drop off in Q4. If we don't really see that big drop off, well, imagine how positive that becomes for Tesla. Okay. Now on Friday, you did have about 460,000 shares that were covered on. Now, we still have no updates on the government shutdown. Okay. No updates at all. It looks like the House and Senate are going to be coming back this week, and we will see what happens. There's a lot of headlines in the past, 20 hours or so about Hamas potentially, taking the deal. But that's pretty much all the headlines you're getting. It's about Hamas and Israel. Now, there is one clip from CNBC that I think is something that you guys should hear. It's only about 3 minutes long, so we'll take a listen to it. It says, market fundamentals are leading to record highs despite noise, said Northern Trust Joseph Tenuis.
Should you position right now? We have with us Joseph Tenuis, the chief investment strategist at Northern Trust Asset Management, which has more than $1 trillion in assets under management. Joe, thank you very much for being here with us. You heard Emily's report on what's happening with regard to the continuing resolution, getting something done to keep the government going. You heard the stuff out of the White House with regard to OMB and cutting funding for certain types of projects in certain locations. All of this is happening. How are the markets really at record highs right now, given all the uncertainty?
Yeah, I think there's a lot of noise which is ultimately creating some volatility and obviously the uncertainty around the government shutdown and how this resolves itself, how long this is going to take until we can finally reach some agreement in Washington is clearly weighing on investors' minds. But at the end of the day, Dom, I think the underlying fundamentals are what's carrying markets and lifting them to these record levels that we continue to see.
I mean, we've talked about numerous times over the course of the past couple of weeks leading into this government shutdown, that if you look at the government shutdowns that we've seen over the past 20, 30 years, the markets largely, generally speaking, shrug them off because there's always a light at the end of the tunnel. You had mentioned that this time could be different slightly. What do you mean by that?
I think it could be slightly different in the sense of just where we are in terms of the economic cycle. And if you think about the Federal Reserve and just monetary policy, and that inflection point, if you will, moving more towards accommodative monetary policy as the Federal Reserve tries to decipher what's happening with the economy given the labor market. I think that creates a little bit of uncertainty around it. I think the longer we go without government data, official government data being released, again, creates a bit of anxiety. Now, as it relates to the labor market, there are other data points that we can look at to triangulate, if you will, what's going on with the economy. And I think everyone knows that the labor market is softening, and the Fed certainly knows that. But the longer this goes on, I think it certainly highlights, if you will, the political polarization that we have in Washington, and that can certainly erode investor confidence.
There's a strange irony at play here. The more uncertainty there is, the more certainty there will be of Fed interest rate cuts down the line. Is that a fair assessment? And what is your house view right now on interest rate cuts vis-a-vis the Fed, vis-a-vis the shutdown and the economy?
Yeah, I think the Fed's, I don't envy them, clearly, right? Their dual mandate are clearly at odds with one another. You have the labor market on the one hand, which is continuing to soften. And on the other hand, you have inflationary pressures, which are likely to creep up a little bit higher in the months ahead as a result of these tariffs. Our view is that you are going to see a continuation of Fed rate cuts. Now, the cadence of which that comes, I think, remains to be seen, and we'll have to just wait and see, as it clearly is data dependent. But over the next 12 months, I wouldn't be surprised if you see the Fed funds rate about 100 basis points lower than where it is today.
Where exactly then would there be the most attractive parts of the market to you right now, based upon the good set of fundamentals that you alluded to earlier? What parts of the market should people be tilting more towards? And then which parts of the market should they be tilting more away from?
Yeah, I think when you look holistically at a balanced portfolio, which includes exposure to risk assets and defensive assets, meaning stocks and bonds, we continue to favor those risk assets. Most recently, we've added some exposure to the U.S. as we have more confidence around a soft landing here in the U.S. We think that economic growth is moderating in the months and the quarters ahead, but the odds of a recession, an outright recession, from our perspective, have come down. You also have some pretty meaningful earnings estimates coming forward into 2026. I think you just look at what happened last quarter, right? Companies basically doubled earnings estimates, and I think that trend is looking strong into the year ahead. You also have a meaningful amount of fiscal stimulus here in the United States. And then, of course, we can't have this conversation without talking about AI and just what that means.
Okay,
and again, as I've said for Tesla, I think a strong end of the year rally is coming. I think some significant upside is coming for the stock. Again, even what we seen on Friday, the stock came down almost to the 20-day moving average, found a lot of support around there. As I said in the video at 4 p.m., you really wanted to close above $20 per share. We got a solid close above $20 per share. We only were under $20 for a brief moment, and then we perked back up. That's a very strong sign that a rebound is likely coming, okay? When you hold support, respect support, people come in and buy around those support levels on a sell-off, on good news, that typically means good things are coming. And, well, October, November, December, seasonally are very strong. And with Tesla morphing into this AI company as we speak, as the way people look at Tesla is actively changing and all of the good news coming, you do not want to bet against Tesla here. I think an easy $100 in upside between now and the end of the year is coming. It's just my personal opinion. Let me know your thoughts on Tesla right now down below in the comment section. Ladies and gentlemen, check out that link in the description of this video if you want to come join the trading community. Have a great rest of your day, and I will see you in the next one.